action.
Hello and welcome to Fish Wrap TV episode 17. Today is Friday, May 28th, 2021. I'm your host, Janie Hansen, along with Q Lair. It's been a wild week of volatility in the markets, and as the old saying goes, rain makes grain. We've had rain through the Corn Belt this week. In today's market update, we'll be covering corn, soybeans, and wheat, discussing inflation, and finally a quick look at propane as a farm input cost. What's the story with corn and the ethanol markets?
Well, we finally took the longs to the woodshed this week in the corn market. We took corn all the way down to $5.50. Nearly got a 4 out in front of this thing before it bounced off, and it was all because of a large rain system that came through the Midwest. Broke a lot of any kind of moderate drought that we had going on in the Midwest areas in the Corn Belt. And also we had some beginnings of Chinese cancellations of not only corn, but what they've been doing is rolling new crop, old crop into new crop. So what that's doing is essentially they've been long old crop. They've got the $1.50 inverse or $1.20 inverse, and they're rolling it to new crop and selling it essentially to Mexico at these huge prices. So it was the trade of the year. And it's at any rate, we bounced off that $5 because we broke it hard. I mean, we really got after it. We had 2 limit days this week in corn, which is really unusual. Corn limits are now 40 cents. We were actually talking about that today on Ag Twitter, that when I started trading, corn limits were 10.
Wow.
Wheat was 20 and beans were 30. And now corn's limits are 40, and we hit it twice this week.
Jeez.
So volatility is definitely up. Of course, margins are up to reflect that. We brought, with that, of course, we have ethanol, which is continuing to go up. Just a quick aside, crude oil broke through the 66 area, traded 67 and a half today.
Okay.
So energy is starting to take off a bit on the upside. On the feed side, hogs continue to rally sharply. China continues to buy. So in other words, they're buying corn, and they're buying corn second derivatives, I call it, which is hogs and a bit of cattle, but mostly hogs. And this something happened this week that rarely happens, where June hogs traded over June cattle. So usually that's 30, 40 cents. And if you're out there in Ag Twitter and you know what the usual number is, cattle over hogs, give me a tweet and let me know. But we just don't see this very often.
So the bacon's more valuable than the hamburger in
Yes.
your bacon cheeseburger?
Yes.
So, but with hogs up and corn up, how does that play out?
China is just buying. And I guess the market, as we say, and, explosives, we'll settle it out when we get done with it, when they get done, because, they are producing hogs here. They're selling, just boatloads of, literally boatloads to China, not to mention the corn. So China is definitely the player. They are driving all of the economics right now. And we will see if they can actually unload it all and do that sort of thing. So very, very interesting what's going on. We will see, but we bounce this thing off of $5, into the 540s, 550s, which, that is big time moves for corn. So we will see, who's got it next week. And it's going to be a very, very interesting market from a trader standpoint next week.
So has all the volatility been in the 2021 crop, or how's it affecting the out years?
The out years, we're still seeing everything being raised. The spreads are starting to tighten. Ironically enough, they are weakening up front and they're tightening in the back.
Okay.
So we're starting to see some liftoff in the 21 versus 2, 2 versus 3, and 3 versus 4.
Okay. So what does that mean for the spreads tightening?
What that means is that the fronts are gaining on the backs. So we call that inverse. Of course, if the front is below the back, we call that a carry.
Okay.
And what that means is that if the market wants you to carry it, that's what we call it, a carry, which is that we will pay you, 4, 5, 6 cents a month to actually carry it out. So
wait for it. We want it later.
Yes, we want it later, exactly, and which is why the Chicago Board of Trade was founded in the 1840s to begin with. But it's the prices are still up, but they're not as up as they were back 2-3 weeks ago. But this is still pretty stiff pricing for corn.
Yeah. So, and speaking of relationships in the market with soybeans, the soybean meal markets are breaking down and oil is continuing to run up. Soybeans themselves are getting caught in the middle.
Yes. This is, I mean, when you look at the meal chart and look at the oil chart, it's like a tale of two cities. You know, it's the best of times and the worst of times. And I mean, meal just looks terrible, terrible on a chart. And oil just continues to punish the shorts. Goes back to our conversation we've had for weeks about just how bad a problem there is in canola, and nobody seems to have a handle on this yet. Canola's still hanging around $850, $900 a Canadian ton, and it's traded 1,000, but it's off a bit, but it's nothing off like what we've taken off the soybeans.
So as a soybean grower, this has been interesting for me to learn about that when you talk about an oil-led rally versus a meal-led. So with soybean oil being effectively the byproduct, that's a smaller percentage of the soybean. So if the run-up is through oil, just means you've got a lot more soybean meal sitting around there waiting. So once the oil market stabilizes, it'll be tougher on the bean itself.
Yes, and the thing is I mean, if the bean meal chart looked like the oil chart did, beans would be at $16 right now. I mean, I'm serious.
Yeah.
And that just shows you the power of when you crush your meal in oil, then what happens is you begin to see liftoffs in palm oil, cottonseed oil. I mean, every oil in the world. Sunseed oil even. There's actually trading in the CME group in Black Sea sunseed oil, sunflower seeds.
Okay.
In Russia on the CME group. So that shows you that people are really starting to get interested in this stuff.
Yeah, paying attention to those world markets.
Yes.
So how about wheat?
Well, it's also a tale of two kinds of wheat here. Spring wheat area continues to be dry. It did get hit with moisture, so it'll be interesting to see what the drought meant. Looks like last week. However, today spring wheat put 20 cents on the winters. So they were down 10, spring wheat was up. And I mean, that, you don't see that very often. But it rained pretty hard through the Kansas areas just at the right time. I mean, perfect. And so the winter wheat crops are made. And that we have a saying, in the pits, crops made. So now it's really how big is it going to be? And we just had our Kansas wheat tour. Numbers came in over 56 bushels to the acre. Last year it was in the 40s. So this is real. That's why they really took the wheat out to the woodshed this week. We're heading directly into harvest. Today actually was the last trading day of the 2020 crop year. So first, Happy New Year. Monday and Tuesday is going to be new crop 2021 is it. So 20 is in the books. But yet, that 56 number is just huge. It looks like we're going to have 400 million bushels in Kansas. And that is bigger than all the wheat grown east of the Mississippi River in the whole country.
Wow.
One state. And you got Oklahoma, Texas, and Nebraska on top of that. So,
So, well, Happy New Year in the wheat markets.
That's
and
right.
You're celebrating that with your national holiday on Sunday?
Yes, the Indy 500. and of course, usually when I was a kid growing up, the race was always on May 30th. So it was like, May 31st was Pillsbury and Cargill's fiscal year end. So it was just like Indy 500 and New Year's. It was just like, boo, let's have a few beers.
Big weekend for you. So but back to the markets. We've been talking with so many commodities being up and implications for inflation. What's going on there this week?
The tenor on Twitter now is not that the Fed and the Treasury are this is out of control. The question is, how bad is it? And they're starting to talk about the 70s with stagflation, Jimmy Carter, that sort of thing. Today was an absolutely devastating number came out. The Chicago PMI came out this morning at 75.2, and it was expected at 68.
Oh, that's a big difference.
Big difference. And I mean, it was almost like they thought it was a typo. This was the worst PMI miss and worst PMI number in 30 years, 3-0. So what's happened is that it is not whether the Fed has lost control of this and the Treasury. It's how bad is this going to get? before they get it under control. And what do they have to do? Because on top of this, we had disposable income down 14%. So you've got prices accelerating on one side, disposable income going down on the other side. So this is not a good thing. So it's going to, keep watching and stay tuned.
Yeah.
And see how bad this thing's going to get. Because I lived through the 70s. You guys didn't. Well, most of you didn't. And it was not pleasant to have 11% inflation and 10% unemployment and 21% T-bills.
Yeah, that's not what we want.
No.
So, and then the copper, the highs keep coming.
Copper keeps coming. All-time highs continues. The housing boom. There's conversation that it's going to be part of the EV play. The electronic vehicle play. So nobody wants to sell it. Nobody wants to get shorted. The mines are ramping up, but it's going to be a year or two before they can really meet the this increased demand, if it's really this. But $4.50, $4.70 copper is really difficult for an economy to chew through at this stage. So always got to keep an eye on copper as the base industrial metal for this, because they keep talking about cobalt and lithium and all these other little things that go into phones and Teslas, but the base thing is
still copper,
iron ore, and those sorts of things. And of course, iron ore is going to the moon too. Pretty funny.
Yeah. So, and lumber, what we've talked about going to the moon
really.
a lot recently.
Well, it's kind of funny because it feels like lumber is really no problem now, but it's at 1,350. So, we were still at 200. Not 10 months ago.
Yeah.
So even though it's come off 1,850, I mean, it feels like it's in a bear market. But yeah,
but just in context, when you zoom out a little bit further,
be careful, because people are still joking about finding a 2x4 in a dumpster 2 years ago, and they thought that was no big deal. But now it feels like you found gold.
So, and finally, propane.
Yeah, I started looking at some of these inputs. There's a lot of conversation about UAN, urea, ammonium nitrate, and DAP, diammonium phosphate futures, taking off. And these are some of the inputs that farmers have to deal with, and these graphs. But I pulled a chart for propane here, and that'll give you a idea here that everything is going to be costing more money here. And inflation is the real true killer of growth. And we're looking at propane going from about 70 cents now to 88 right now for even nearby, much less when you need it for drying corn. So it's really we're probably gonna have to build a model for propane, so that we can help you price when to get that, just like selling corn, buying propane, just flip the model and get to work on that.
So speaking of the model, the Croptimize will be making some moves on Tuesday.
Yes.
So more updates for what percentage hedge to be for farmers in the grain markets. Also, tune in next week for continued commentary on what's going on with China's role in the corn markets and the aftershocks of this week's PMI number on inflation.
Sure.
So, anything else for this week?
Rain makes grain. And if you remember 2019, we didn't even put a hedge on until the first week of June. We're going to be almost fully hedged up next week. So, this crop got in early. It got in good. There's been no washouts. There's been no, serious replantings. So, if this game plays out, we're going to have big crops this year, but good prices. So,
well, stay tuned.
Stay tuned.
So that's all for this update. We'll see you next Friday.